Hello, everybody. Welcome back for another video. Hope you're all doing great. Hope everyone out there is doing absolutely fantastic and that you're all having a wonderful day. Don't forget to subscribe to the channel if you haven't already done so. Very big thank you to everyone who leaves a like on the video as well. And without any further ado, let's jump right into it. I think next year, I said it before, I think it's going to definitely come true. I think next year is going to be a little insane for cryptocurrencies, for asset prices. We've had stuff recently more about interest rates, the idea of multiple interest rate cuts next year as well, especially when the head of the Fed is gone. A lot of the last few months have we've seen a dramatic turn in the discussion of the cryptocurrency market. We've had a sprinkle of a few price predictions, but a large majority of the things that we've been going over have particularly revolved around the idea of staking, the idea of yield, the idea of stable coins, and the biggest digital elephant in the room has been tokenization. And it was lightly discussed years ago, but I think everyone has kind of realized that it is possible. It is a thing. The idea of digitizing real world assets, RWAs, on chain in some sort of way, providing yield, providing an easy access or more of a liquid way for people to accumulate assets like in real time. So as you might have imagined, as this is going to be a thing, it's already slowly kicking off. But next year is kind of touted as the year of stablecoins, yield, and hyper tokenization. Real world assets on public blockchains could reach trillions of dollars by the year 2030. Panelists said during a session moderated by Crypto News in Rio, Brazil. We've heard that a few times. We're expecting the stablecoin market, but it's always 2030. Everything's 2030. Every single thing that we keep hearing is always by 2030. I guess it's maybe more of a round number, and 2031 just doesn't sound as exciting. Everything is 2030. It's this idea that by 2030, the stablecoin market is going to be 4, 5, 6, 7 trillion US dollars. The amount of assets that will be tokenized on chain is going to reach trillions of dollars because it won't be like a steady drip. It's going to be a massive flood of assets. As if you've missed those videos, this isn't like one small company or corporation is talking about this. It's like BlackRock and Fidelity and all these other people who have openly come out and said, no, like we're going to be tokenizing. It's just a matter of which chain at this point. Ethereum is always touted as like the shoo-in for where things are going to happen. Stellar on the screen recently has been trying to throw themselves into the conversation as to like, hey, we also exist. We also can do it. Cardano has been doing the same since the beginning of the year. Cardano has been talking about linking up with Bitcoin and having stable coins run on their chain or being minted on their chain. What else is there? There's like one or two other chains that usually get mentioned. I do not think that every asset in the world is going to be on one chain. So this will probably be a multiple winner kind of a situation. Speakers from the Stellar Development Foundation, Centrifuge, and Moody's argue that tokenization is already moving from experiments to production. and that institutions waiting 5 years risk being left behind. I don't think any major company is kind of on the sidelines at this point. This is fairly understandable. Most assets value are in most already digitized. They might be digitized on a stock exchange or on a website, whatever. It's not that difficult to understand the digitization of something, but creating like a token of its value, I think for smaller players is going to be a bit of a doozy, as we've been going over before, and it's mainly whatever. We're not going to really get into it. Real world assets encompass anything originating off chain and brought on chain. Receivables, funds, real estate, you name it. Anything that basically has value, you will be able to digitize in some sort of way and then subsequently fractionalize it so people can also buy up a portion of it. That's basically the idea. One of the main functions right now has been funds, treasury bills. They're digitizing bonds, like a lot of very stable, lack of volatility, government kind of things that people can wrap their head around. And stocks are also being tokenized as well. See, it's not even digitized, it's being tokenized, made into tokens individually on chain. That's what's taking off. And then eventually real estate and gold watches and art will kind of be the next level of it. It says, for now, the first movers are the boring but compelling yield products, U.S. treasuries, and high-quality funds with CLOs, collateralized loan obligations, and private credit emerging as next wave candidates. Yeah, so basically the things that people know and have been able to legally figure out if they can put it on chain, that's what's moving there already. Liz Ray, CFO at the Stellar Foundation, noted the importance of making previously gated instruments widely available in small amounts. As we've been going over, I told you this is the future of owning assets. The idea of owning your own home will be a thing of the past. It's not a joke. This isn't like, he's making stuff up. No. Every major asset will be gone. It will be in the hands of rich people and of institutions. The idea, the importance of making previously gated instruments widely available in small amounts is the idea of, well, you can't afford a home. Therefore, on chain, you can buy 1/1000th of a house. That's what it is. It's basically making so that other assets can be fractionalized, and therefore other people then can say, hey, I own 3% of a house in New York. And you go, wow, you're a real estate owner. That's why I told you before. We've gone over this thousands and thousands and thousands and thousands and thousands and thousands of times. That shift, she said, is the real power of DeFi distribution. Institutions are already piloting digital twins of funds and deposits, panelists said, citing activity from BlackRock, Fidelity, Franklin Templeton, and Goldman Sachs. We heard about them around August. So we always knew that they were in crypto, but the idea of DeFi and tokenizing assets is like really big. So it also even extends even further with the idea of like using the fractionalized things that you have like on DeFi platforms. So let's say there's a place that takes real estate tokens and stock so-and-so as collateral for like a DeFi yield product out there. You would be able to like actually use the thing from that you got before from the DeFi thing inside of another protocol, all just on chain. But then you have to remember that all the assets, especially in this way, are going to be also amassed and purchased by the richest people on the planet. There's a huge portion of this world of people who are just not paying attention, and it is really disappointing because it's always this way. A lot of people let these things slip by them, and this is going to be no different. It's going to be just more dramatic and also in silence. It is all going to be on chain. You won't see people walking around the streets, carrying keys or carrying pieces of paper. I own these assets. It's all going to happen digitally. The short run driver is simple: new on-chain liquidity, hungry for real-world asset yield. It's always yield. Everything now is yield. Everything we've been talking about in crypto has to do with putting assets on chain, making money from it. The assets already on chain, make money from it. This thing that's on top of this thing, digitize it and make yield from it. This is going to create a very simplified, complex system for people who are holding assets to get even richer than they previously were in a very short period of time. And a lot of people within crypto still aren't paying attention to it, so that's going to be interesting. Yeah, this is a rather long article. It keeps going and going and going, and they talk about the future and how much money is going to be there, and this thing is going to be digitized. And yeah, never forget how early you are in this market, because it's only going to get crazier if all these rumors and ideas are true, and prices continue essentially going up forever, as we've been told. We keep getting 2026, 2030, 2032, then this is going to take off like wildfire. So yeah, every day is more news about yields and staking and putting this digital and this so-and-so. So hope everyone's paying attention. That's the tokenization news. And yeah, let's move on. Also in cool, Thailand is apparently preparing to widen its cryptocurrency exchange traded fund offerings, moving beyond Bitcoin to include a basket of digital tokens as regulators seek to strengthen the country's position as a regional crypto hub. I assume Thailand was one of them. I don't remember. Years ago, there were a lot of countries who kind of is a very weird thin line. They either chose Bitcoin and Ethereum alone as like the legal coins in their countries, or they banned them all together. There were a lot of countries in Southeast Asia and also in Africa, I think none in Latin America that I can remember, who all announced that they were either banning Bitcoin and crypto and no one could use it and it's evil and awful and horrible, or they said, we're going to look at the coins and figure out which ones are actually legal within our country. That was if you were here years ago, we used to have like really, it was deemed exciting news when we heard South Korea has just allowed 2 more coins within their borders. Japan now is allowing 6 coins. It sounds crazy, but this is how a lot of the market used to actually be. So the same exact thing for Bitcoin ETFs, crypto ETFs. A lot of countries mainly focused on Bitcoin and Ethereum. These 2 coins have the most liquidity, therefore they can get the ETFs. Therefore, everyone is moving a little bit further in another direction now because they have slowly realized, or maybe suddenly, that crypto is not that scary. There are a lot of other coins that are part of the forever narrative as well. There are about 7 to 10 coins that people kind of point at and say, like, this coin's going to go a lot higher. This coin's going to be used for this. This will happen on chain for that. So you got to start throwing money at the other winners as well. The Thai SEC is drafting new rules in coordination with other agencies, aiming for a rollout early next year, Bloomberg reported on Thursday. Local mutual funds and institutional investors are expected to offer the products once approvals arrive in place. The SEC Secretary General reportedly confirmed the agency aims to expand the range of crypto assets included in their ETFs. The regulatory push comes at a time when Thailand's stock market fell by 7% this year. This is also, and I don't really, okay. Their stock market fell, got it. It says, and younger investors are increasingly drawn to digital assets. This is often used as a narrative, and I don't really agree with it. It's always this kind of thing that, well, the only reason why this country is now allowing crypto within their borders is because their stock market's falling, and they're like, oh no, we need something else. No, that's not ever actually the answer. These people couldn't actually care less about crypto. What it is that they're seeing everyone else get into the market and they see how much money there is to be made. The idea of, well, younger investors like it. The people in power don't care what young people want. It's just that there's a lot of money to be made, and they assume that younger people into crypto, the normal demographic ranges anywhere from very early 20s until late 30s to the people who are most into crypto. Of course, there are people in their 40s, 50s, 60s, and 70s into crypto, but the largest percentage tends to be younger people, air quoting there. And therefore, as their life expectancy is expected to increase, if they're into crypto, this means that they're going to be interested into crypto for a while. So these countries are like, okay, this is the trend. We got to make sure that we also follow the money, because if the prices of these things continue to go up and we don't integrate it, we don't accept it, we don't use it, we don't allow these products, they will simply go other places to get access to the things that they want. There's always this really weird, it's the same exact thing like when a company announces that they're getting into crypto or allowing a product or something. We're doing this for the sake of our clients. We understand that they're looking for a safe and easy. No, they're doing it because they saw the company across the street make 1.3 billion in profits and they went, oh, that's what it's for. Same exact thing when you hear all these countries and these states. You can now pay for your taxes in crypto. You know, the things that you don't like to do, guess what you can pay? You can now pay that in crypto. They're looking for ways to basically absorb money. And this is the new market. So it has nothing to do with younger investors. It has nothing to do, oh no, our stock market's down. Oh well, got to accept the new system. No, it's the idea of tokenization being worth trillions in 4.5 years. It's the stablecoin market being worth trillions in 4.5 years. It's the idea of Bitcoin going to $1 million per coin in 4.5 years. It's always looking forward in the money. And now other countries who once, and once I don't think it was Thailand, but other countries who did shy away from crypto, or crypto's evil, it's bad. They're now like, oh, yeah, there's money to be made. Let's start accepting all of this stuff. Let's make rules and regulations. That's how it always works. Yeah, cool. This was lightly popular news, which I was slightly surprised at because it has to do with Thailand. We normally do not have Thailand cryptocurrency news. So the fact that I saw this on multiple websites, I was like, okay, that's definitely something different. Yes. The market continues to grow, expand, mature, as it were, as the expectations of the amount of money that are going to be flowing into this space only increase. Probably going to get a lot more news like this as well. I mean, we've been getting a lot from the states as well, like the individual states within the states, all announcing like, hey, rules and regulations, we got it. This is happening. You can do this. You can blah, 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 you can blah, 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 blah. It's all just about money, and all the money that they see or perceive will be flowing into the market in 2026 and beyond. I think that's going to do it for this video, everyone. I do hope that you've all enjoyed. I do hope you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. I do hope that it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and supporting, and I will most certainly be talking to you all soon. See you.